Welcome back to Bazaar Morning Call. Hope you're having a good morning. Well, the focus is going to be on IT stocks to kickstart trade. Explains why the Gift Nifty suggesting we opened well in the green. Siddharth Kempa, the head retail research at Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Morning. What do you make of the Infosys and TCS numbers? Both of them appear better than street estimates. Between the two, which one do you like, and what do you make of the numbers?
Very good morning, Nigel. Good to be on your show. So if you look at the expectations from the IT sector for the quarter was not very strong as we headed into the quarter. This was, I think, the first quarter in almost last 26 quarters where we were expecting a decline on a Y-on-Y basis in the earnings. And to that extent, the street was a bit fearful about what could come out of the results. Thankfully, the results are better than expectations. Not that they have been out of the world, but the fact of the matter is that things are not that worse compared to what the street was expecting, and that is the soothing factor for the IT sector for now. If you look at the management commentaries, I don't think things have changed a lot to change the estimates or outlook. So both for TCS as well as Infosys, our estimates continue to remain same. Infosys has narrowed down the guidance, but the center point for the guidance, both for the growth as well as for the margins, continues to remain same.
Okay, and TCS saying that... Sure, go ahead.
Yeah. But if you look at in terms of what they have managed to do is that, especially TCS, they have managed to internally control costs and report a better margins, which has been a big factor for being more positive or constructive on TCS between the two.
Okay, got it. Just before we head to the rest of the team at TCS that's coming up in just a while from now, very quickly, Siddharth, what would you do with a stock like Polycab after the so-called clarification that came from the management?
Yeah, Sonia, so if it's a very difficult call. We don't have a coverage, but if you look at the situation, if a fund manager or investor is holding it and you are coming up with this kind of news, it's very difficult to take a call because the stock reacts negatively sharply. The company has come out with clarifications on both the days, but that will not help give any assurance to investors right now. So I think it's very difficult to take a call given the uncertainty or there is lack of clarity in the near term. Definitely, it's a red flag, and one should be taking a cautious view till things kind of emerge clearly. And till the time, I would not get into, if I were not an investor, I would not look at the correction as an opportunity.
Siddharth, the IT stocks now are in pre-opening are looking very good. Infosys, in fact, is up 3.5%. TCS, the management commentary was a bit cautious, but they did say that FY25 will be better than FY24. Post listening into their commentary, what would your thoughts be?
This is in line with what we are expecting. So there is a gradual recovery. Margins have come off to the second consecutive quarter of margin improvement. And as I said, between the two, we believe that TCS, given its size, order book, and exposure to long duration orders and portfolios, is well positioned to withstand the current weak environment. So we are quite optimistic, at least from the growth outlook for FY25. However, as we said, the near term, we are not changing our estimates as of now, and we continue to maintain our numbers. So I think 1 or 2 more quarters of pain in the system is there, especially given that the macro outlook has not changed.
Okay, that is IT, big IT earnings coming through and a reasonably positive management commentary, you'd have to say, from TCS in the present circumstances. Siddharth, hi, good morning. Surabhi here. I just want to shift the conversation away to the other major pillar and pivot for the market, and that is what Reliance has been doing for the past 2 sessions, right? Your thoughts on what could be triggering the market's interest once again? Is it a build-up to earnings? Could be something more? And, what's your own call in the stock?
Yeah, Surabhi. So I think Reliance, in terms of results, there's not much of an expectation, especially because of what is happening with the overall oil and gas sector. The things are definitely improving. I think there are 2 fronts where things have kind of improved for Reliance. A is on the the Jio front, both on the Jio Telecom as well as on the Jio Financials, where there is some improvement in numbers. Jio Financials listing and value unlocking has definitely helped the company. And if you look at in terms of GRMs, Singapore GRMs on a Q&Q basis has definitely seen some improvement, although on a Y-on-Y basis it continues to remain lower. And again, I think it has been a long underperformance within the index. If you look at Reliance, which has been one of the highest weight counters, and with market at all-time highs, I think there is a lot of interest now in terms of valuations that the fund flows are moving towards Reliance rather than interest more towards the earnings.
Yeah, I just want to point out, by the way, that in the pre-open, thanks to the fact that TCS and Infosys have been better than really bleak expectations, these two stocks are notching good gains in the pre-open. The Nifty is, as we were saying earlier, is probably going to test the upper end of the range, and for that we need to watch out for the previous level. So 21,760, 750 thereabouts. These are the previous highs, and then of course we go on to talking 21,800 plus. But right now, I think a test of the top end of that band in all likelihood is possible. And if Reliance plays ball along with the IT boys, we know what that means.
Also, must point out that the TCS management was not very encouraging, to be honest. It's just that there was no negative surprise this time, both in Infosys numbers and in TCS also, given the kind of macro environment that we've seen. These are not a bad set of numbers. But having said that, one must keep in mind that, it's not all hunky-dory in the IT space. They're still very cautious on several pieces. So I think it's just positioning of the market, right? Going into the numbers, they had some optimistic views. All right.
Siddharth, I wanted to ask you whether you had a look at these smaller companies. You have HG Infra, that's won a big order. A couple of these other infra names as well, Bajal Projects, not spoken about that, but they won a project coming in from Tata Projects. Any view on either of these two companies or some pick from the infrastructure sector itself?
Yeah, Nigel. So I think if you look at the overall earnings expectations, some of these the core infrastructure or core industrial sectors that have started reporting strong numbers. So including some of the likes of cement, capital goods, where we are expecting strong numbers overall. From this space, while we don't have coverage on these names, if you look at the broader space of the capital goods, we like Kirloskar Oil Engines, which is a strong player in the power gen segment, and they are expanding its footprint in the aftermarket as well as the exports market. Interestingly, the company is launching 37 diesel gensets in the new segment, which is the CB4 plus compliant products, which we believe will kind of not only give the higher yield, but also lead the next scope of growth. So overall, we are expecting a strong set of earnings growth driven by margin improvement, higher share from exports and aftermarket, and that should be leading to a 170 basis points improvement in margins. We like the stock from this mid and small cap name Kirloskar Oil Engine with a target price of 840.